Want my latest market insights? My latest report, Gold just had a 5 standard deviation move, is now available. Scan this QR code or click on the link in the description. As far as I'm concerned, the year-end, or what I call the year-end hedges or positioning, down halfway. We have halfway to go in this correction. That's what I want to say. I think this correction is halfway done. Is it a good place to bounce here? Sure. 6666. But I think big picture, even after a bounce, we can see those levels I gave you come into play. I don't see any strength this month. Remember how Jason had said November is going to be wonky and potentially dangerous? I still see no positioning. You know how I showed this to you in my Monday piece where I said I give you 10 reasons. This was on Monday. Lots of reasons, lots of good reasons, lots of really, really good reasons. And then I said, here's bonus 5. CTAs haven't even started selling yet, but buyers have stepped away. Critical. That's a critical concept to understand air pocket of risk. And then this one, SPX expiring gamma. Now, what you want to see is kind of the plus. This is minus. You can see that right here. It doesn't look good. And I said so. I don't like this backdrop for November. And this is totally separate from what Jason wrote about last month for November. They're totally different. He talks about Vanna and dealer flow, but this is expiring gamma. This is what it looks like right this minute. Like I just took this 2 seconds ago, right here. I got nothing. There's nothing here. Today's going to be big ugly. I can tell you that this is a very nice short that I gave you. Double or nothing, another 100 points. Now, we got nothing though for the rest of the week, next week, and even the week after. And then what do we have? NVIDIA earnings are 19th right here. So this kind of period. But my point is they're still not building up. They're still in defense mode, I guess is what I want to say. So it went from this, where at least options expiration looked pretty good. Now it is a nothing burger. That's all I'm saying is even that backdrop of some support has not appeared yet. And trust me, I look at this every single day. It's like this. Do I worry that CTAs are going to sell? Yes, but I know it needs a trigger. Buyers have stepped away. Yep, I already knew that. The breadth decay was clear and buyers are stepping away. This is option flow bullish. There isn't much. And it corresponds with Jason. Dollar bullish, seasonality, already timed that. We're having a little pullback. This is into November. That's why gold and silver are just not that important until we can get this kind of action. It's done going up. I don't think it's done going up right now. Anyway, point is, if you're bullish, you really want to see a gap down on Monday. Big picture, we bounce before we head down. That would be my baseline bet. So when I said 100 points lower, and then yesterday double or nothing, okay, we got both of them. Now we're halfway in this correction. I think we bounce and then roll over to the lower levels. So here's what I'm looking for. This is, for example, remember how I said buyers have stepped away, but CTAs have not started selling aggressively, and they got lots to sell, but they have not. They have not. They've been very restrained. They may be waiting for NVIDIA earnings, honestly. But the point is, see this level right here? This date, this is on a daily. This is cumulative volume. Basically a kind of a net buying, net selling read I work hard to stay in tune with. Monday the 27th, you can see how we pulled back, had a little bounce for a day, pulled back, had a little bounce for a day, and now we're not at the bottom of this channel, which is what I would really like to see. That would be better. And we have not finished, we have not finished the selling underneath the surface. Right now it's nothing burger. Most of this happened in futures. Anyway, the point is this needs to stop going down and then move higher. So we could have a little bounce like this, and then the better buy is once it does that. So we have to have this crossover. So that was a really good time to buy August 12th. And look what happened. We came outside of this channel, we got back in, and then look what the market did. Up, 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 because underneath you can see the Qs and SPY. Now, since this started to sell off, it's a really good kind of indicator of weakness underneath the surface. They haven't come back in yet. And that's not the only thing. And this channel isn't the only thing. It's this. The oscillator is saying, no, we can have a little bounce, but oversold can stay oversold. Overbought. Like when it gets into overbought, what did the SPY do? I've got right here, SPY and Qs. What did they do once this oscillator got overbought, which is above 80? You can see it right here. I don't care if you take that date or that date. Let's just say August. What happened from August, end of August into September? Then October started to get a little shaky. We had the 10-10 pullback, but we still went higher. Look underneath here. And then we just recently topped out on the 29th. That's it. And the market has been falling since. Client Brian nailed it. He said, I'm calling a top. But my point is the sellers have not stepped in aggressively. No, they have not. Volatility has not stepped up aggressively. Nope. Buyers have stepped away. It's a big honkin' difference. Buyers have stepped away, but we do not have any forced selling. So this can stay oversold for a little while and we continue to fall, but it looks like we want to have an itty bitty little bounce and then let's see what happens just on that indicator alone. We already know about this one. This already started to wane. It had been green on the scene and then it started to wane September. And then it started to get a little soggy and then it crashed. And it crashed, by the way, before October 10th. Now look, breadth crashed. What did the market do? Kept climbing higher, kept climbing higher. And I said, no, this is a pathetic excuse for a bounce. We continued lower. And then what did I say on the 31st? We have an air pocket of risk underneath. Be careful. And that's what happened. Now the markets have sold off and they're catching down. This is not done going down. This is advanced decline. Okay, we can see it's bearish. It's not done. That's advanced decline. It's bearish. It's trying to bounce. But these aren't, you got to take them all together now. Plus with this whole concept of growth value rotation, are we stabilizing a little bit on 2.3? Could we have a little bounce to relieve some of the pressure? That's all I'm looking for. But I still think this correction, big picture, is only halfway done. We've had a 5-day pullback of size if you look at, for example, NVIDIA. Topped out. I know these are all red, but the point is we made a higher high, so I have to go from the most recent higher high, not this one. Anyway, this is it. Monday, Tuesday, Wednesday, Thursday, Friday. And it was still soft, still weak sauce. But this is what's helping semis get pulled down and breaking the 21-day. This is what's helping the Qs come into 600. This is what's helping SPY come into whatever level I gave you, 662. This is what's helping SPX come into whatever level I gave you, which is 6650. So semis are under distribution, et cetera, et cetera. That's all. We know the growth scare. It hit. It was time. Now what? We're holding the 6666. People are wanting to monetize on Friday, very likely. Most folks are already monetizing, but the risk is this dollar yen continues to sell off and volatility continues to get bid. And we do not have to have a perfect 6650, but you get the idea. It's not a game of perfect. Volatility is definitely not done. Big picture, we back inside my 1.1. So when it gets back inside 1.1, it's like, ooh, something's wrong. And then when it snaps back inside above, it's bullish. Like right here, it became bullish again and we moved higher. So the fact that this is rolling back over, that's not bullish. That's bearish. So the market has not caught its breath yet. I know I got a lot of indicators. I got some macro stuff. I got some intermarket stuff. I got a lot of technical stuff, but quant stuff. Just imagine this is your portfolio and you're like, okay, Samantha thinks this correction's only halfway done and the CTAs haven't even started selling yet. So now you understand why those March puts that I identified a few weeks back are such a good deal. Just in case all of a sudden CTAs go, we've had a down week. They're sellers in the tune of 31 billion. Now we have a down month. By the way, October wasn't great, but November is horrible. So think about this for a minute. On the CTA front, CTAs, if we have a down week, they have 30 billion to sell. This is October. This is the start of November. If we have a down month, which is what I'm saying looks very likely, so far I see no change of the complexion of market structure. Very important to me. I see nothing white. It's all gray. It's all negative, not positive. So if we have a down month, what are CTAs going to do? They're going to sell 200 billion worth. I will show you. They have not, repeat, they have been so controlled. They have not triggered forced selling. I can't emphasize that enough. Here's what they have done so far. And I posted this also in one of my detailed market thoughts. So I already posted this. I forget what particular day it was. All right. So back here in August, as the market has risen September and October, CTAs have been gentle sellers. Gentle. That's very gentle because they bought all the way up. Remember, this was April 9th. We had Trump and Bessent intervene. 1 p.m. for the Treasury auction and 1:15, Trump literally says, okay, I'm going to delay the tariffs. And the shorts covered and CTAs bought and the rest is history. And they started to peter out back here in mid-August and September and October. As the market's been going higher, this is important, they have been lightening up. No big dumps. We haven't even crossed the zero line. Emphasis, zero line. Emphasis, zero line. I've done this before. Once they cross the zero line, selling picks up. We're getting closer, but we're not there yet. So just kind of keep that in mind. We've not triggered CTAs. We likely have a down November, and they have 200 billion to sell. And then that helps the dealers unwind. That can also trigger yen carry trade, unwind. Market can get a tail risk and fight all of that seasonality. And more importantly, it's not just CTAs. You got dealer flows, you got vol control, you got all kinds of other players. But my point is, this is the problem of the tail risk I'm talking about, or what I'm looking for that triggers this activity. They're not buying, is what I want to say. So they're not buying. And positioning is 100% consensus bull. I've not seen one wirehouse, not one analyst from JP Morgan, Goldman, none of them are worried. We're going to hit it. We're going to hit 7,000, 7,100, 7,200 by year end. So that's exactly when I start to worry. And that's exactly why I said market is getting nervous. 10 reasons for market selling and 5 bonus charts. I hope that makes some sense.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.